morning, traders. Hope you are doing well. My name is Timothy Hellberg. I'm a professional trader since over 12 years back, and today I'm bringing you a market report in collaboration with IMG FX, the people's broker. This report will cover the upcoming week of week 23 of 2022. Before we get right into it, let me just remind you that this is not a recommendation to buy or sell anything. It should not be viewed as financial advice. All of that normal stuff, you can pause and watch the disclaimer if you want to. This is purely here for educational purpose, and it's just me as an experienced trader running through my views on the market, and you can use that however you want to. So if we look at the agenda for today, we will first run through the economical calendar, where we look at the events for next week and what to do and what to watch. We'll talk about market sentiment, the current and the potential shifts to look for. Then we'll take a look at last week's calls, where we had a mixed bag of results on the trades. We'll look at the chart for Bitcoin, that is still trading sideways. We will take a look at gold, where the support is still in place. We'll look at Eurodollar, that still has a good two-way chart that really depends on what we see the upcoming week in terms of macro push in the euro and in the dollar. You can trade it both to the upside and the downside. And then we'll look at pound CAD, where we have a short setup going, and we'll look at the US dollar, which is the big name for next week. So let's look at the economical calendar, and when doing so, I like to use Forex factories. So Monday will be a very, very slow day. As you can see, we have a lot of bank holidays and not any big news scheduled. So we'll have to work with whatever we got on Monday. Expect liquidity to be thin. And then Tuesday, we got Australian cash rate early in the morning, which is basically rate statements from Australia, and that can be interesting. As I've always said, interest rates are the big ones in the Forex space, so definitely want to keep an eye out on that, especially if you have Australian dollar exposure. Other than that, it's a pretty slow day for Tuesday. Wednesday, not much going on. Thursday will be the big one, where we have the rate statement, the rate decision out of the Eurozone, and I will talk more about this when we talk about the Euro-dollar trade and what to look for there. But basically, there's room for disappointment here. There's also room for surprise. I think the ECB can do either. They can surprise the market in a positive way, and they can surprise the market in a negative way. But like I said, more on that when we talk about the euro-dollar chart and the potential trade that we have there. Later on that day, we have a Bank of Canada governor that is speaking, but I wouldn't put too much emphasis on this one at this point in time. Then we end up Friday with unemployment out of for the Canadian dollar, and we have CPI and core CPI for the United States. Obviously, employment can move the CAD quite a bit, but it has to deviate a lot from the expected figures. And CPI will be the main focus of the market there, because it's a big inflationary reading. So, with that said, if we jump into market sentiment and we bring up the VIX chart like we used to do, market sentiment, we have seen we've seen volatility trickle down a little bit. We have broken down through the 100-day moving average. We have broken down through the short-term adaptive moving average, and we are now targeting the 200-day moving average, the blue line down here, meaning that we're coming down from the highs more into a more neutral territory. But if we take a look at the S&P, that's the reason why. So we haven't really gotten that follow through on the fall in stock markets yet. Instead, we got a small rebound, and then we just consolidated around there. So naturally, we see volatility go down also as we are consolidating more in the equity markets. So I think we are sort of stuck in between a rock and a hard place in terms of risk sentiment at this point in time, because the market isn't really positive, it's neither negative. It's really a wait and see sentiment market, which is always the hardest market to trade. We are very, very dependent on news headlines, comments from, in this type of environment, central banks, etc. So thinking about where we go next, I still think we have the major risk to the downside. The thing is with this, when we always have pullbacks in the stock market, and when we get that, what we wait for, a good telltale sign, is when you see the big guys. So we are talking about big hedge funds, big financial institutions, the heads of those institutions, etc. When you see those people just vaguely, slowly starting to hint about things, they say things like, we see value, etc. Meaning that they are starting, that's like a key word to them actually starting to pick a bottom in the market and starting to buy into that market because they like the value at that point. We haven't heard that yet in any way. So that tells me that the big guys, they don't feel comfortable watching this as the correction is done and now we just go higher. No, they are worried, and so is corporate America, and so are investors. So I think the risk is still to the downside for stocks, and in my opinion, it's just a matter of time before we start to see this going. And seeing this indecisiveness that we have in the market at this point in time, in terms of risk on, risk off, I think that kind of cements what I'm saying too, that nobody wants to be caught on the wrong side at this point in time. So if we look at Bitcoin, the Bitcoin chart, let's look at it. As we've talked about before, I've talked about this air pocket that we are in, and we are still in it. We're just moving back and forth. Bitcoin versus the dollar is a great risk proxy, and risk proxy meaning that it's a indicator for how the general risk willingness in the market is. Bitcoin going higher indicates a very risk-willing market. Bitcoin going lower indicating a very risk-averse market. So if Bitcoin goes up, you would generally see stocks go up, and if Bitcoin goes down, you would generally see stocks go down. So I'm not too sure with Bitcoin. I don't have a trade on it. I wouldn't want to touch it at this point in time. It's way too indecisive, with my general view that there's still more room for stock markets to fall. I think it's the risk in Bitcoin is tilted to the downside. My preferred take would see it take out this bottom and move lower rather than moving upwards, but I'm not going to trade it. I'm not going to even try and sell rallies, because I'm not that convinced of the price action in Bitcoin at this point in time. If we look at gold, so gold last week we had it actually held up nicely in terms of this support. Yes, we got a daily close below it, which easily could have taken some people out depending on what your exit strategy is. I'm still in my gold longs. I'm not going to cut them before we take out this lower low here. Actually get a daily close below this red area down here, and then we moved back up above it and almost got back into my old target. I think there's still room for gold to run. I like it as a dollar hedge too, because as a general, I'm thinking we might see some dollar momentum starting to pick up again, and if that would be the case, we could see that gold goes down. But if we don't get that, then I like gold as a hedge to that, as that would mean that gold would keep going up. So I'm still long gold. I don't see a reason to not be at this point in time, neither from a technical nor a fundamental point in time, but I wouldn't bet my whole account on it. It's just more of a positional trade. Looking at euro dollar, so euro dollar, I talked about in last week's report, is still on but we still have this two-way chart. I was highlighting this area last week, and we were going to watch how it behaved around that level. Was it going to break out to the upside, or was it going to move down low? We didn't get a convincing breakout, so I know some people, some traders that I work with, they actually took this short trade and they made good money on it, just like a short-term trade. I think this is still a two-way chart, so I don't have a specific trade set up just saying you can buy here or whatever. It's more a chart of, if we get a convincing close above here and you start seeing the dollar getting hit again, then definitely long trade is on. We could move up to this target right here, and we could even extend much higher than that in the long term. Your dollar has been sold so hard that there is definitely move and momentum for it to actually make a decent recovery to the upside. On the other hand, which is my preferred scenario, if we start seeing the US dollar getting hit again this week, if we start seeing the US dollar gaining momentum again this week, we could see this pair pushing down, and that's my preferred trade in euro dollar. I don't mind trading it to the upside, but what coincides more with my general view of the markets is that we see stock market starting to fall again, and we see the dollar getting stronger again, which would mean that we see euro dollar going down, and in that case, going short against the tops and targeting the lows, you get a nice 3-to-1 risk reward. So I definitely think that trade is on the books. You just have to watch for the entry in either direction. Next up, we have pound CAD, which is a interesting trade. We have actually broken out of this consolidation pattern right here, so that has opened the move to the downside, and as you can see, we've taken out multi-year lows to the downside. So do you want to sell it at the very bottom? Of course you never want to do that, but if we zoom out to the weekly chart, we see that it's just the recent year lows. We have this big consolidation over several years from 2010 into 2014 that we are coming down into once again. So I would say any of these lows we could easily target, and just from a general point of view, that seems to be quite a significant area in pound CAD. So if we go back on the daily and we zoom out a little bit, that could be our first target, where you can at least get a 2-to-1 risk reward. So I think this trade is on. I like being short a pound at this point in time. They have problems with stagflation. I've talked about this in many updates before. So I think there's a good trade in pound CAD, especially as CAD has a big exposure to the oil price. And if we look at oil prices, you can see that this is once again a chart that I highlighted a couple of weeks ago, where we've had a consolidation and broken out of it to the upside quite significantly and taken out the first level of resistance too. So, and just moving higher. So, you know, with that said, I think there is some decent room for oil to keep on gaining too and targeting the latest highs, especially based on, you know, Europe adding new sanctions and trying to ban Russian oil and all of that. So from that point of view, I wouldn't mind seeing CAD gaining some strength too, and I think it's a good pair to go long CAD against the British pound, meaning you go short pound CAD. So that's that trade. And lastly, I want to look at the US dollar with you guys. And so the US dollar is a index of the United States dollar weighted against a basket of other currencies. Now the majority of that basket, around 50% give or take, is against the euro. So the majority of this price action is against it's just an inverted euro dollar chart. But you also have other currencies like the yen, etc. weighted in there too. It's just not as big as the weight against the euro. So keep that in mind. And anytime you look at the Dow Jones, not necessarily Dow Jones, any dollar index, but they are all more heavily weighted against the euro than any other currency. So it's not like 5% yen, 5% euro, 5% pound, etc. No, that's not how it works. So the issue that we have with the dollar chart is that we have broken out of this sort of wedging pattern down here. Sorry for my expertise. We've broken out of this, but then we moved back down. And this is not the kind of type of price action you want to see after you break out of a wedge. You want to see this get some legs to the upside. So this big red daily candle is not price action that you want to see. So from that point of view, I'm not 100% just going to sit here and say that, oh, the dollar is gaining strength, it's going to make new highs. There isn't anything in the S&P chart that is telling me that we are getting this rally either, with the S&P breaking down. So like I said, with market sentiment, we are a little bit in wait and see, and that's the same thing here. But as a general, my preferred scenario would be that we see that we start pushing up again somewhat in the US dollar. However, something that you need to highlight is that this could also be a breaking structure where you now have a lower low, and this could be a new lower high. So from that point of view, this could be the start of a more deeper pullback down into the larger support area. It's too early to tell. So I will have the US dollar index up on my screen every single day in the upcoming week, because this will tell me, as a big general, where is the market going all the time. So I will watch this very closely from a technical point of view, which of these patterns is the one that is actually going to manifest itself. Are we seeing a breaking structure with a lower low and a lower high, hinting at a deeper pullback lower? Or are we seeing a wedge pattern that has broken and price action that is looking to break out to the upside? That's what we'll look for in the upcoming week. So yeah, that's it for me this time, guys. If you enjoyed this, please leave a comment, leave a like, that's very appreciated. And until next time, I hope you guys have a safe and profitable week. Take care.